everyone feels the same everywhere, because the entire world is on lockdown right now. So that's interesting. It'll be interesting to talk to our grandchildren, or our children about this. We lived through the pandemic, coronavirus, that all that bullshit. We're the survivors.
Fact.
Yeah. All right. How's everybody doing in the chat? If you guys can hear us, please let us know. We'll be starting momentarily. Yo, Elwin, what do you think about USD CAD?
Let's pull it up.
Yeah, give me 1 second. All right, can you see my screen? We got news in just a moment on USD CAD.
Let's see here.
Looks like it's forming a little M formation off the high.
Yeah, definitely trap sellers around the 14th. Shifted against them, stopped hunting them out, playing off the high of last week. Seeing a little.
What I like about it is that first leg, the high of the day, was made like New York session. Yeah, exactly, in New York, right around here. So
yep, about an hour in. Now we're getting.
We also have news in about 1 minute. So yeah, my bias on USD CAD is it'll drop. It could very well shoot up. However, it has exponentially filled its ADR. It cleared out the stop losses of these sellers here.
Definitely.
So the sell was induced. Now they just got done inducing the buys. I would say we're looking for another sell here, just to bring it down at least I don't know, 50, 100 pips. We got the new candle.
Looking at some crosses, looking at like Euro CAD.
All right, we will get into the live education in a moment, you guys. We're just looking over this USD CAD setup right now. Apparently there was news. At least that's what I was told. I didn't actually look into it. We'll see.
So we already had it.
Yeah, I guess we already had the news at 8:30.
So that would have been the stop hunt to the sellers, the bullish candle.
All right. Thought it would have been more exciting. Nice little M, shoot down like 30, 50 pips. But we could still very well see the market range right here into, what is this? We're now in New York session, into Asian session. I'd like to see maybe drop like this, consolidate a bit, into Asian session, into the next day.
Definitely. Like you said, ADR, you know, kind of got that move already today. So
Yeah, we have
let them fuel up.
250 pip ADR, or well, range today from the low to the high. So considering the previous day was 50 pips, maybe 100 pips here, 100 pips there.
And you know, everyone in the States getting that stimulus check, right?
Yeah, that's
$1,200. So to me, they just inflating things on the dollar, you know.
It's funny how the dollar went up. Dollar kind of spiked up today. But it makes sense because the trend was becoming very obvious.
Yeah. Same for like, you know, like odd USD. It's been going up and then we shifted down on it. Same for like NZ USD. Looking at the dollar index kind of resembles UCAD as well. That's a lot to remove. You sure?
Yeah, I'm not sure why my computer's so laggy right now. I think I'm out of RAM. All right. So today we are going over the reversal before midweek. Otherwise known as the Tuesday reversal off of the highs or lows of Sunday, Monday. And give me a moment. I'm going to pull up some pictographs for you guys to see. All right, can you guys see my screen here? The Tuesday reversal pattern variation.
Yep, seeing it.
All right, beautiful. This is what we're going over today. This is the Tuesday reversal pattern, the reversal that occurs before the midweek reversal. So when the market, the previous week, so we're talking about the Sunday, Monday, and then the Tuesday reversal. But if we look at the previous week and we see Sunday, Monday, Tuesday, Wednesday, Thursday, Friday in a trending market, and the trend has become obvious. You guys know what I mean when I say obvious. It's just obvious to retail traders that it's a trend, and the retail traders feel as if they can get in here as a sell, get in here as a sell, and make money off of that. This happens after Sunday, Monday, Tuesday, Wednesday, Thursday, Friday, the entire previous week, or most of the previous week, even if it's Wednesday, Thursday, Friday, is a trending market, and the trend becomes obvious. Okay? What happens when a trend becomes obvious? And I'm talking about, we're looking at the micro trends on the 1 hour chart, the 15-minute chart, even the 5-minute chart, because we can see this is the days of the week here, okay? When you have an entire week of downtrend, entire previous week of downtrend, it'll most likely become obvious at some time. And that the time of which it becomes obvious to retail traders normally is between Thursday and Friday. That is the time, normally Friday, when the low of that previous week is made. All right? The low of that previous week is then worked off of the next week, the coming week, Sunday, Monday. Okay? They work off of that low or come very close to that low and then reverse Tuesday. Here is an example of the Tuesday reversal. However, in this case, in this case, you can see that if this is the daily session break, we can see this is the exact low of Sunday, Monday. And then we can see Tuesday, they come and make that little W formation, that second leg off that low. So that's still considered a Tuesday reversal pattern off the low of Sunday, Monday. And they reverse the trend, okay? Because the trend has to reverse. Now, a characteristic of this is that when the market comes up, it'll consolidate here off of this trend line. Why is that? Because retail traders, once price reaches this trend line, will be selling, selling, selling. Price comes down. Price comes back up to touch that trend line. Once again, retail traders, what happens? They start selling, selling, selling. Price comes down again, a bit lower than this previous low. What happens? Retail traders start selling again. What happens? A news event comes out, or anything can happen. It doesn't even have to be reacted or orchestrated via a news event. This can just be a one candle that's 50 to 60 pips, one big fat 15-minute green candle shooting out of here. Normally, it is a news event that causes this, or the change in a session. Let's say maybe London session opened right here, a big fat green candle right out of London session. Here's an example with our signature trade. So we can see the entire week of downtrend. That's the induction trend. Sunday, Monday, Tuesday, Wednesday, Thursday, Friday. Friday, they create that low. Sunday, Monday, they work off that low, consolidate. Tuesday, Asian session consolidation. London session, most likely London session. They'll break out to the low of Sunday, Monday. Not only is this the low, the current low of the week, but we are also breaking past the previous low or the low of the previous week right here, Friday. We break past that low. Why? Why do they break past that low? To induce the sell. Remember, there are going to be retail traders placing their support here, support resistance. They can see once the candle breaks past that support resistance, oh, that's a confirmation to sell. Price comes back up to respect that support resistance, comes down as if it's respecting it, breaks past the previous low here, another confirmation for retail traders to sell. What happens? A news event, New York session, right? This is right around New York session, boom. Reverse, completely reverse the trend. This is for—
And just to add on that, fam, just one little thing. That last retest into the second leg W before the shift, that's where a lot of, like, you know, us ECR traders can get trapped. Right above that, the sell that you could have bought, like you would sell that and you would drop down and it would hit that previous low in reverse. A lot of retest traders or ECR traders, this is where you get trapped and you're like, why didn't the ECR work? I had a cross, I had a retest. It's because, you know, just because the EMAs are telling you something doesn't mean that, you know, it's going to work. So what Dylan is showing you with the structure, with these traps, is really going to help you, if you're a retest trader, know when to take one, when not to take one. Because the same way that we take these retests for our entry along with the market maker, they use it to trap you too. So I just wanted to highlight like how that final retest is just trapping traders, even someone who would take an entry like us.
Exactly. And that's exactly what it's made to do, to come retest the previous support or resistance that was made by the low of either Friday or start of Sunday, Monday. And they come to retest that because they recently broke out of it. And they retest it and they sell off of it and break the low of the previous retest here, the previous breakout. And that is all a psychological trap as well. Remember, this would be considered a downtrend. This right here. Why? Because we have a low, we have a lower low, we have a high, we have a lower high, and we have a breakout of even the lower low, right? And that's where retail traders say, all right, I'm in. There's so many confirmations here. They're breaking out of my resistance support. They're breaking through my support here. They're making lower lows. All of these things. I'm just going to go with the trend and wish me my best luck, right? Just follow the trend. Even if you're just following the trend and you don't even use any confirmation, accept the trend, right? The trend, you can't realize a trend until at least 3 days. It takes at least 3 days for a trend to become noticeable. Now on the 4th, 5th day is when the trend becomes obvious. This is when retail traders start to hop in, right? 1, 2, 3, 4, 5. On the 6th day, bye-bye. If you have 6, 7 days of trend, that's almost 2 weeks of trend, 10 days of trend. The market is bound to reverse, especially when the trend is obvious, becoming very obvious. And now you guys can take the obvious trend, take the confirmations that I'm giving you, right? The Tuesday reversal, the signature trade, all these different confirmations, like a puzzle, put it together piece by piece and say, all right, it looks like they're trapping off of the low of Sunday, Monday. The induction trend is set. The signature trade is set. I'm set. I'm in on a buy. Let's go. Pips. All right. Let's see a different setup. This is a more simple setup, you guys. But it is the same exact concept. Signature trade. Here is a concept without the signature trade. It's kind of just a consolidation, but it is the same exact concept. Right? We have the obvious induction trend, 3-4 days of trend. We get to Friday, the low of the week, work off the low of the week, Sunday and Monday in consolidation, break out off the low. And remember, this consolidation is, as well, retail traders are going to have support, resistance, line here, and most likely a line right there. What happens? Asian session, they keep in consolidation. London session, they break through all your lines, all that confirmation that retail traders use to trade, to get in, right? And this is that same exact example we showed before, where it breaks through the line, the support resistance of retail traders, and it comes back to retest it. This is where the retail trade, the retail herd gets in, because that's their confirmation to get in, right? You don't just, some of them don't like to just get in because of the breakout. They don't just trade the breakout. A lot of them just trade the breakout, but a lot of them as well, they have their second confirmation. And the creators of price understand this, okay? They understand that the price broke out. We couldn't trick all of them. So we're going to come up, retest, and trick them on the second bounce here. If they didn't get in on the breakout, oh, the breakout and retest, we'll catch them on that, right? We have to understand the games that they're playing, you guys. This is the largest mind game that exists, Forex. Here is a perfect example of the previous example that we showed, but this is on a live chart. This happened yesterday on USD ZAR. So we have Tuesday, Wednesday, Thursday, Friday. Very noticeable trend, very obvious trend. We get to Friday, Thursday. Actually, Thursday, we have the low of the week set. Low of the previous week. Then we see Friday in consolidation, the low of Friday set. Sunday, Monday, continued consolidation. We have the low of Sunday, Monday set here. What happens Tuesday? Tuesday, London session, Asian session continued in consolidation. London session, come create that first leg off the low of Sunday, Monday, breakout second leg to the low of Sunday, Monday, and an instant reversal off of that low. In one candle, they spike up. Look at all these previous candles, how tiny they are. But it seems like in just one candle,
cleared the whole range.
Cleared the whole thing. Incredible. So let's check out, this is Euro US dollar. I believe this was 2 or 3 weeks ago. This would be considered Sunday, Monday. Tuesday, Wednesday, Thursday, Friday. Sunday, Monday, and Tuesday. So this happened just like 2 or 3 weeks ago, you guys. Obvious trend for the entire previous week. See, when I say an obvious trend, and take note, 1, 2, 3, that's 3 days. By 3 days, the trend starts to become obvious. Because here, for these 2 days, the first 2 days here, you can't really define this trend. You can try to, maybe here, maybe it's here. But when you have a third day, that's where that saying of retail traders comes into play. The third tap of the trend line confirms the trend. So it would be 1, 2, 3. That third tap takes at least 3 days. At least 3 days. By the third day, by day 3, right, this is normally Wednesday or Thursday, retail traders understand that, oh, this is a downtrend. I got to get in on this. I got to start selling with the trend. I got to start selling as soon as I get the opportunity. When is the most likely opportunity going to come in, or the best opportunity for them? Right here, right here, right here, right? Why is this? Because they have so much time. And 2 or 3 days ago, They were just understanding that this was a downtrend. They were just configuring correctly their trend lines because it takes 3 days for a trend to create itself. Now on the fourth, the fifth day, that's when the traps start to happen. What do I mean by traps? Here we have a false support as a trap. They break through it. What does that do? That induces sellers that trade breakouts. They create another false support. Break through the false support, once again inducing retail traders to sell because of the breakout, just because of the breakout. And once again, because they want to get in on this sell, they want to follow the trend, and that trend has not, or the market has not given them the opportunity to get in on a trade like this. Until we see Friday, the low is made, low of the previous week, comes Sunday, Monday, what do you know? Boom, boom, boom. As if they're giving you all this time to sell, right? What a perfect opportunity to sell off of this trend line. Boom, 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 boom. All of this time to sell. How many retail traders are trapped in here going with this massive trend? As if it's that easy to trade Forex. Just put 2 lines on your chart, follow the price. So we have Friday, the low of the previous week, made Friday, and we have Sunday, Monday. Price continues in consolidation. This is very similar, this setup, to this setup here. However, there is a few more confirmations. We have a signature trade, wedge pattern, breakout to the low. However, this occurred Sunday, Monday. We don't really trade Sunday, Monday. What we do see though, is that Tuesday, they came and they worked off of that.
Yo, I think, where'd Dylan go? Oh, there you go. You there, bro?
Yeah, I'm not sure.
Okay, cool. Go ahead and reshare. There we go. Perfect.
So we have Asian session come in, and this is exactly what we see here. Where Asian session, they create the low right over here of Sunday, Monday, and Asian session, they work off of that low to create that W formation off the low. What do we see here? This session marker here represents a new day. This is the low of that new day. They worked off of the previous day's low, which is Sunday, Monday, and then completely reversed against the trend for Tuesday, hitting the stop losses of all these retail traders that are trapped here, of the retail traders that were trapped here, of retail traders that bought in here. Notice where they came. Where did they come to? They made it to this zone and even spiked a little spike past it. Why do you think they did that? Because how many retail traders got in right here as a breakout sell? They had to go up to that price level to get them out of their trades. They just spent the past 3, 4, 5 days and over the weekend as well, waiting for that trend to continue. Yet in one day, Tuesday, in just a few hours, it shot up to their entry price again. You think they're going to stay in that trade? I doubt it. What happens if they do? Come back down a little bit. Retail traders start to adjust their trend line because maybe they drew it out wrong or something like that. And they start selling again and again. And what happens? They're stopped out of their trades again. This is a massive mind game. That's really all it is, you guys. A very, very large mind game. Let's check out USD ZAR. USD ZAR is one of my favorite pairs. And a lot of times, there will be midweek reversals or Tuesday reversals, just perfect examples on the USD ZAR pair.
Abid said, so it would be good to look for about 3 touches to the trend line first to confirm the reversal. Yeah, 3 taps, 3 anything is going to actually create the trend, create the pattern in the retail mind, whether it's to a support resistance, whether it's to a diagonal line, but it's technically a trend line after 3. So after that third one, that's when people will start to actually see it.
Yeah, because if it's just 2, then they're kind of just guessing. But once they have the third day and the third tap to their trend line, they're like, okay, yeah, this looks like a good trend. We'll wait until the next tap to get in. So here's another example of the Tuesday reversal. This isn't the best example, but it is a Tuesday reversal. Well, no, we'll look over a different one. We'll look for a different example. All right, we have a nice midweek reversal here. Sunday, Monday, Tuesday, Wednesday, Thursday. We can see that same thing that we're talking about, you guys, where we have a half of a day here, a whole day here, another whole day here, another whole day. So that's 3.5 days plus this next half, about 4 days of trend to create that quite obvious trend. That is the induction trend. And if we label the days of the week, we can tell it's an induction trend as well. Sunday, Monday, Tuesday, we see Wednesday, Thursday, and Friday, right?
just to add, just to not get completely caught in counting the taps, that's important. But I think what Dylan was also trying to show us is the behavior when it gets around the trend line. Like in that example you just highlighted on USD ZAR, before it makes that reversal, you see how it just kind of accumulates. It's
It
a
gives you
diagonal
so much
accumulation.
time.
Yeah.
They're never going to give you that much time if they're actually going to make the move. See, like for example here, they got right to it, one candle touched it, they didn't go back. Okay, this should be Friday, Thursday, Wednesday, Tuesday, Sunday, Monday. This should be Friday as well. So check this out, you guys. Here's some nice examples. We have Sunday, Monday, Tuesday. This should be Friday. This should be Thursday, Wednesday. Wednesday, Thursday, Friday, Sunday, Monday, Tuesday. Obvious trend. Thursday, Friday, Sunday, Monday. 3 days. 1, 2, 3. On the fourth day, once we get to that day, what are we looking for? Traps of retail traders. Sunday, Monday, the high is made. We have Friday, creating that false support, break through it, Sunday, Monday, to induce the buy. Here is the new high of the week, or high of this new week. Here's the high of the previous week. Somewhat of a signature trade. I would say it's a little signature trade. Break to the high. That's the most important aspect. Why? Because retail traders are placing their lines here, their resistance. So when price breaks through that resistance and shows candles dancing on top of that resistance, which is now turned support, what happens? Retail traders start to buy. Because what do they see? They see a high, a low, a higher high, a higher low, a higher high. Okay, that's a buy. They see the trend, obvious trend, easy enough. We're just going to buy. Because that's what we're taught. That's what retail traders are taught. And a complete reversal off of Sunday, Monday's high of the previous week, Friday, after that breakout induction, one more induction off the high of the previous week, off the high of the previous day, Sunday, Monday, and there's that perfect Tuesday reversal. Remember, we put the puzzle together, you guys. Tuesday, Thursday, Friday, Sunday, Monday, and we have Tuesday. Okay, we put the puzzle together. We have 3 days of obvious trend. We have the trend line setting up. Nice, two nice confirmations there. We have the signature trade. We have a confirmation of a trap Friday breaking out. We have a signature trade breakout off the highs of the previous day. And it is also Tuesday after 3 or 4 days of obvious trend. A reversal is expected. We're just stacking confirmations, you guys. And that was a 300 pip move from the low, excuse me, from the high to the low of the week there. Now, if we check out the second week, one, 2, 3 days, obvious trend. Sunday, Monday, we get to the high. Possible signature trade. Breakout to the high of Sunday, Monday. We have Friday creating that false support, false resistance, excuse me, to which they break out of, inducing the buy. They create the high, and they work off of that high. Now, this reversal did not reverse as we like it. As normally, we have the reversal calculated to at least half of the trend. So right around here. However, in this case, it only reversed about 150 pips. But that is still a very nice amount of pips. And if you don't catch the Tuesday reversal, remember what happens midweek. Wednesday, Thursday, we see what happened. 1, 2, 3, 3 days of trend. Trend is starting to become obvious. They have to reverse the trend. What happens? Create the false support, break through the false support London session, and reverse for the remainder of the week. All right, hopefully that is, you guys kind of got an understanding of the Tuesday reversal. Let's check it out one more time. This is ridiculous. 3 weeks in a row. Maybe more. We have Tuesday once again here. This would be Sunday, Monday. This would be Friday, Thursday, Wednesday, Tuesday. Okay. Once again, the same exact thing, same exact setup. One, 2, 3. Obvious trend. What happens? Friday, false ass support. Break through the support. Create the high. Sunday, Monday. Signature trade wedge. Breakout. Break past the high of Sunday, Monday. To induce one last time. Off that high, we see 130 pip reversal. Right after all of those confirmations, you guys. The 3 days of induction trend, Thursday, Friday, comes Sunday, Monday, create the high, Tuesday, signature trade, as well as in conjunction with the breakout, the Tuesday reversal off of Sunday, Monday's highs. Now, this is 3 weeks in a row. If that doesn't tell you something, you guys, and what I really want to make clear here is that this is the micro. This is what happens on micro to form what happens on macro. Micro trends within macro trends. That's how the markets, this is why the Tuesday reversal exists. This is why the midweek reversal is so common. Because the market has to create a trending environment. And this is how it's done. Every 3 days or more, 3 or 4 days, after an obvious trend has appeared, there will most likely be a reversal. Now, line that up with Tuesday, Wednesday, and Thursday. Tuesday, why? Because the previous week could have been an entire trending market to come to a low or a high Friday or Sunday, Monday, to then break that lower high Tuesday and reverse Tuesday, Wednesday, into Thursday, come to the midweek reversal again Thursday, because once again, that's the next 3 days. 3 days have formed. Okay, what happens after 3 days? A reversal. So come Thursday, Friday, we see the reversal again. All right. Does anybody have any questions about the Tuesday reversal? Or is everything about clear? Billy says this is magic. You bet, yo. We are some wizards here. This is Hogwarts, the Hogwarts trading school. Yeah, you guys, I'm glad to see you guys are learning. Once again, this isn't an overnight thing. I didn't learn this stuff overnight. I didn't just get on the chart one day and, oh, the Tuesday reversal. It looks like SignatureTrade. You know, I didn't just make this stuff up in overnight, you guys. This is dedication over years, a span of years of accumulated knowledge, accumulated time on the charts, because most of the time, you know, trading is maybe 5%. Live trading is 5% of what I do. The other 95% is back testing. And I wouldn't be able to trade if I didn't back test. I wouldn't be able to teach. I wouldn't be able to understand this, any of it, if I didn't dedicate the time I did into back testing what I have back tested, into the hours just sitting and staring at my chart, wondering why is it that every 3 days after I try and get in to trade the trend, that the trend reverses on me, right? Because I was once in your place, you guys. I was once taught that you should trade a breakout, that you should trade with the trend. I was once taught that this was the only way to trade. The only way to trade is technical analysis, support and resistance, throw some indicators on there, you know, follow the trend and you'll be good. You'll make some money. That's what we were all told. We were all lied to. This is a massive show, you guys, just like everything else. We are on a massive stage and we are all being played. All the 90% of all of the, you know, the knowledge that the brokers share, all of this is is a massive, what I like to say, conspiracy. However, there is no such thing. I wouldn't say there's any such thing as a conspiracy. A massive deception. That is a great word, Abid. Massive deception. All right. We have a question here. Can you use ADR from the previous trend run to gauge the reversal, which should be ADR, if that makes sense? So what I like to gauge in this reversal here, when they go against the trend, is I like to place my take profit levels where the obvious support and resistance levels are of retail traders. So for example, right around here, right around here, right around here. First take profit, right here. Second take profit, right here. Why is that? Because we can see there is something here. The price is like a magnet that goes to this spot over and over and over, breaks through it, goes back, right? So we can copy and paste these zones here and expect price to basically rebound, right? To completely shift out of this trending market in a very short period of time. Why? Because they have to catch all the retail traders off guard that were trying to get in on the sell, that have been waiting 2 or 3 days to get in the sell, or that have been in their position for various days. You know, what about the dude that sold here just because he saw a breakout? He got in right here with a few lots. What happens? He'll start going crazy because there's consolidation. And then what happens? He doesn't even have time to react because price moves so fast against him that what mostly will happen? He'll lift his stop loss. He could even start selling more just because he sees price getting to that zone again, right? This is all.
Yeah, I never understood that.
What's up, brother?
Sorry.
No,
you know how people add on when price goes against them? That's the worst thing you can
do. No, but we've been there, yo, and we've done that, and it's all stemmed from this move right here. Catching you off guard, making you wait and sit on your hands for 2 or 3 days consecutively, and then in what seems like a matter of seconds, you go and you get something to eat, you go take a shit, you watch an episode of Netflix, and what happens? You come back and the entire trade goes against you. Yo, it's like the entire move, it's like the entire market is against you. And that's how it feels. It feels so shitty to be on that side. And it's like, yo, I feel you guys. And that's why I'm here. That's why we're here for you guys. Look at how beautiful this is. USD CAD doing exactly what we expected. But yes, we feel for you guys. And that's why we're here. That's why we created this academy. Because there are so many people teaching you bullshit. Teaching you to sell this. Sell this trend. Go with the trend. Right? All right, we have a few more minutes left if you guys want to ask some last questions. Can you explain what psychological levels are? Yes. I would say Mark explains this a lot better, but anyone can really explain it. A psychological level Now, when you say psychological level, we're talking about the mind. We're talking about human beings. We're talking about, take this into consideration, the laziness of a human being to, instead of type 1 point, right? Instead of type in this number here, 1.40086, the lazy ass human being will just type in 1.40. We've been there, we've done that, and that's what a psychological level is. To where there's most likely going to be, just because it's a round number, a lot of orders in that specific level, at that exact level, not at 3 or 5 micropips higher or 3 or 5 micropips lower, but that exact level, just because human beings are lazy. Instead of typing 1.399999, we'd rather just type 1.4. And that's mostly what a psychological level is. A whole number, right, where we see 1.420, 1.43. Psychological levels can be set up in different ways. I know Mark, he sets his levels like every 50 pips or no, I think it's like every 500 pips or something like that. But he has special psychological levels at whole numbers like for example, maybe 1.40. And then another one at 1.50, right? And those are psychological levels to where liquidity will most likely be because of retail traders placing their orders not anywhere around there, but at that exact level, just because it is a little bit easier.
I would add that,
yeah, brother,
just to kind of generalize, psychological levels are going to be the areas, going to be the levels of human expectation. So definitely these whole numbers, when you see 1.4, 1.5, and yeah, you can even go into the quarter numbers. There's a quarter theory out there where you would look at like 1.425, 1.45, 1.75. You can back test this, but it's gonna be where humans have their expectations, and you can even see them not as just the numbers, but even like the support resistance. Those are psychological levels as well. If you look at this 1.4 psychological number, as well as its former support acting as resistance. So we can speculate that there will be a lot of retail traders getting in there. And then, maybe they're selling off of that 1.4, stop loss is right above it, and then look, price break right through it.
Beautiful, bro. Yep, that's exactly it. Alrighty, you guys. Looks like not many more questions are coming in. Hopefully, we resolved that. Sometime on a reversal, the induction breakout will be so large. How would you speculate that would be a reversal and not just another day of drop? That depends on a lot of different factors. For example, the pair you are trading. So some pairs will stop hunt or break out or induce more than others. For example, USD ZAR will break out 50 to 100 pips to induce or more in one direction. Normally, for example, Euro USD will break out or induce 20 to 30, 35 pips. However, if the breakout is larger than that, most likely you will get stopped out if you have a smaller stop loss. I personally use a 20 to no larger than about 35 pip stop loss. That's my average stop loss range. sometimes even 15 pips or less. However, if it is more than that, I usually just say, all right, I was stopped out. I'm going to wait for another confirmation, right? Either if, let's say it was the induction off a breakout out of the SignatureTrade wedge, and the induction was an extended breakout where you didn't think it was going to break out 50 pips. It broke out 50 pips, but you had a 30 pip stop loss. All right, you wait to find more confirmations to put together in that puzzle and say, all right, we're still in, that happened at London session. We'll see if New York session, they create a W or an M formation off of the low or the high of the week or of the day, so that I can get in another opportunity with a 20, 30 pip stop loss to get in for a buyer to sell off of that stacked confirmations. Now, if the trade just continues going against you, I would reanalyze to see if you have a confirmation that's wrong, or something like that, basically. Your best opportunity is to just stack as many confirmations as possible. And if the trade goes against you in a volatile manner, take the loss, take the stop out. Because once again, for example, this trade USD CAD, this was a 200 plus pip reversal. You could easily catch that with a 20 or 30 pip stop loss. And you could get stopped out 2 or 3 times consecutively trying to catch the trade. But if you understand that this trend must reverse at some time, okay? They're not just going to continue this trend, because it becomes so obvious that retail traders will obviously start getting in. So they have to reverse the trend. And that is when you get in. You get in after you get stopped out. Let's say you get stopped out after an extended induction or an extended stop hunt. You wait for more confirmations to stack, and then you get in, especially if that continuation, that trend is continuing. Yeah, back maybe. What's the best session to enter USD pair reversals? I suggest London session or New York session. New York session is a very good session. That's my session. That's my session that I like to trade normally. New York session, as I can wake up at 5 in the morning here in Costa Rica, 6 in the morning, get on the charts, trade, and in a few hours be done with the rest of my trading day. And that's when most of the reversals occur, either New York or London session.
Yep, I love when I see a first leg at London Open and then a second leg at New York.
Yeah, bro, that's the beauty.
I saw one question about backtesting. Do you simulate the real condition of the market candle by candle, or take all the chart by week? Really, you can do either one. You want to kind of break down the market in different ways, but like, let's say you're backtesting, entries, you probably want to scroll left and reveal the candles by candle, so you can kind of see, was I right? You could use a simulator if you want, but like, let's say you're trying to mark out weekly structure or macro structure on a higher time frame, then at that time you might be using more chart data. So it really, you look at the market data, you look at the charts, like you know, this is where you do your scientific investigation and you go in with a plan on what you're investigating. So it depends on what you're investigating.
Exactly, brother. All right, here's a great question about fundamentals. Do you use fundamentals, data, news releases? What do you use Forex Factory for? Forex Factory. I go into Forex Factory. Pay close attention to this. Go into Forex Factory. I click this little funnel button. I have only expected impact as high, red folders. Apply. And I have never, in the history of my trading, clicked on this. I've never given a crap about the actual, the forecast, or the previous. All of these numbers are bogus. The only thing that we care about is the impact, the currency pair, and the time of day. Then we look that, with that information, we see if this time of day is correlating with the pair that we see correlating a reversal because of structure. So, for example, USD CAD, we said, I personally thought there was a news event that was going to happen an hour ago on USD CAD. So I would line the structure up with the time of the news event. I'm sorry, you guys, I'm not sure what's going on with the chart. All right, there we go. So we lined up this second leg, expecting a drop. We were in the zone after this obvious induction or obvious breakout. Create the high, the second leg off that high, and if we would have seen for example, a news event based off of the structure, we would say, all right, that news event could influence how this trade plays out. It could influence, it could create, for example, let's say we have an entire downtrend here, and right around here, this next candle here, after this candle, we have a news event. This candle is most likely, we don't care about these numbers. We don't care about the forecast, the previous. We don't care about any of that because we already have our friend, market structure, telling us exactly what could happen. However, we have to use our other friend, Forex Factory, and the days of the week, right? The timing of the event and what the currency pair is. We don't care. We don't really care about the names of the events. We don't care about the details of the events. We don't care about any of this. All we do is line up the time of the event with the currency pair and the structure. So this could have very well been a news event right here that caused that nice little spike out. Or for example, vice versa. This could have been a news event to induce the sell-off. And then another news event a few days later to induce or break out of that induced previous event. Breakout of that entire range here, and it is an excuse for the news event. The news event is used as an excuse to break out. Alrighty, you guys. Looks like we are out of comments.
Thanks a lot, bro. Great session. Great session.
Alrighty, you guys. Thank you guys for tuning in. I will most likely have another session tomorrow. I will have to confirm it for tomorrow, but I would like to have a session tomorrow on lunar trading, trading with the market, and how the moon moves the market. So get ready for that. If it's not tomorrow, I will reschedule for another day because I do have a lot of stuff planned tomorrow, but it'll most likely be before tomorrow. Anyways, thank you guys very much for tuning in. Thank you, Elwin. Thank you for hopping on, brother. Always good to see you here.
Anytime, bro. Peace out, everyone. I'm in the chat if you need me at Elwin Coleman. Need to talk over anything. And tomorrow we'll be having a Trading View live stream. I'll also do a Zoom link for the Academy just to make sure we got a great connection. And we'll be going over trading plan in depth. So make sure you're there.
Sheesh. Love it, brother. All right, you guys. See you guys later, yo. Thank you guys for tuning in.